Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to another insightful episode of our XAUUSD Live Technical Analysis session. Before we dive into the details, as usual, let's run through our daily routine just to quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please give me some positive feedbacks in the comment section by typing in hi. Your highs will give me a feedback that we are good to go, and then we can kickstart the session. And if things are not sounding too good, let me know too as well, so that I can do the necessary adjustments. So thank you very much, guys, as I look forward to your feedbacks, and while I also load up my comment box. Thank you very much, guys. All right. So I can see a couple of comments right here from Jan Jukes. Good morning. Isobe, good morning to you. Hello, Carrie. Thank you very much. Thank you for your feedbacks. Malalela, good morning to you too. Thank you very much, guys, as I really appreciate that. So I will take this as a positive feedback that we are good to go this morning. I see you, Kim JP. Thank you very much. I really appreciate that. So it's on this note I welcome you all once again to yet another promising edition on the XAUUSD Live Technical Analysis session. My own name is Sharif Daramola, and for the next 1 hour I'm going to be your host, as I will be taking you on a trading journey where we shall be evaluating the financial landscape from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So it has been an interesting 24 hours for us all. Remember, since the beginning of the week, we have been monitoring 4 financial assets, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also had the GBPUSD, which was newly introduced to us after over 6 weeks of absence in that market. And finally, the XAUUSD, popularly known as the gold spot. So far this week, we've done fairly well. The USTech100 and the USOILSPOT, in fact, is considered to be the most profitable asset so far since the new week began, and we still see some struggling in the US dollar, trying to attract some buyers in the last 24 hours. And of course, we know why the currency market has been a little bit sluggish since the new week began. As you all know, the uncertainty surrounding the timeline of the federal interest rate cut is a major factor that is causing indecision in the market at this point. Then coupled with that, we have major US macroeconomic data coming up later in the week, which has made major key players in the market step aside, waiting for the outcome of this event before making any aggressive or directional bets. Now, we're looking forward to the GDP, the US CPE, and of course the manufacturing PMI later in the week to give market participants that fresh impetus they are looking forward to before making any decision. So as a result of this, we are seeing this choppy market conditions going on, and we are going to be taking these into consideration while we review the current market structure today. And to help us guide our trading decisions, I have simple trading setups that I'm so excited to share with you this morning. So I call on you to exercise patience, stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you joining us for the first time, you are highly welcome on board. Very excited to have you around with us this morning, and I do know that one of the things that will be running through your mind right now is, what is it that we are doing here? What is it that we're doing on the Extreme Speed Live technical analysis session? Well, as technical trader, we usually gather here every day, coming together as a community to engage in follow-ups and reviews of our current trading positions in preparation of the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I recommend that you stay tuned in so you don't miss out on those insightful ideas we will be sharing during the course of this session. And it's also important for you to remember that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing this information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and extend and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first exercise we normally go through is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment today. Well, so far since the week has begun, we really have not had any high impactful event. So to guide our trading decisions, I had to include mid-tier economic features to give us a broader view into what market participants are looking forward to before making any informed decisions. And one important thing, one of the most important things that involves monitoring the economic calendar is that it gives us an insight into potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, so far this week, we've had a couple of events. On Monday, yesterday, we got the speech from Pilhu from the Bank of England policymaker. We also had the new home sales change, which gives us an insight into the housing market conditions in the United States. And of course, the figure came in better than the revised data from the month of December, as we had a 1.5% expansion in that sector, which for us is a good signal and for the US economy. However, the US dollar is yet to gain traction, as we all know why that is, as market participants are waiting to see what the interest rate decision is going to be like in the coming month. And in fact, we are looking forward to major data later in the week to guide these decisions. Now, today, February 27th, Tuesday, we have some mid-tier economic features that we will be looking forward to today to guide our trading decisions, and I will be running through the most important ones on this list. And of course, we want to be saving the timing so that we can position ourselves for any move that this event will present to us. Now, the first one on the list is the durable goods order, which is usually released by the US Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, excluding the transport sector, obviously. And we know how the durable products often involve large investments. They are sensitive to the US economic situation, and generally speaking, a high reading is considered as bullish. while a low reading is considered as negative. Now, if we look at the previous data for the month of December, it came in at 0.5%. While economists are projecting a 0.2% for the month of January. So, though it's a little bit lower than the previous data, but it's still there's still an expansion in that particular sector. So we look forward to see what the actual data is going to be on that one. Then another high impactful event we're looking out for from the United States is coming in about 3 hours from now, 3 to 4 hours from now, and that is the Housing Price Index, which is released by the Federal Housing Finance Agency. And this event provides us with an estimated value of housing market conditions, and it is considered to be an important indicator, as the housing market is considered as a sensitive factor to the US economy. So on that one too, a higher reading is seen as positive, while a low reading is considered as negative. Now, if we look at the previous data for the month of November, it came in at 0.3% expansion, and economists are projecting another 0.3% again. So we look forward to see what the actual data will be there. Now, from the United Kingdom's economic docket, in about 3 hours from now, we will be listening to David Ramsden's speech. David Ramsden is a deputy governor for markets and banking, and is also a member of the Monetary Policy Committee, that is the Financial Policy Committee and the Prudential Regulation Committee as well. Now, whatever he says today is going to be holding some weight, as market participants will be scrutinizing his rhetorics to get an insight into the monetary policy outlook of the Bank of England, and of course have an insight into the health situation of the United Kingdom economy. Then later on, we are looking at Michael Barr, who is a member of the Board of Governors, and is also the Vice Chair for Supervision of the Board of Governors of the Federal Reserve System. So he's going to be giving a speech today too, so we look forward to hear what he will be saying. So you want to be saving the time of this event so that we can strategically position ourselves for that. Then finally, today we are looking at the Consumer Confidence Index from the United States. We saw that from the United Kingdom come in last week, Friday, which wasn't the promising data as well. Now, this report details consumers' attitude, buying intentions, vacation plans, and consumer expectations for inflation, labor market, stock prices, and interest rates. Now, the data shows a picture of whether or not consumers are willing to spend money, which is a key factor, as consumer spending is a major driver of any country's economy. Now, we do not have any data to reference to, though we might likely see something maybe an hour or two before the event happens. So we look forward to see how well the US consumers are confident about the economy on that one. So these are the events we're looking out for today. So I encourage you to save them, know the timing, so that we can strategically position ourselves for the next move. And as technical traders, from experience, we've come to understand that the anticipation of this event as a way of influencing the sentiments in the market, which of course would reflect on the chart as price action. Now, talking about price action, let's delve into the business for today. So as usual, the first asset we will be looking at today is going to be the US All Spot, and what a phenomenal 24 hours we have here, as we currently have a minimum of 3 buy positions running in profits over 300 pips at this point in time. And for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby. Well, let's run through how the week began for us all in this community and what led to the decisions that made us to buy this asset. So right here on the 1 hour time frame, we did realize at the beginning of the week that price started around the $76.50 level, which happens to be our key level, and dropped into the $75.87 area, where we had a range bound trading activity. And usually when we have this kind of situation, we want to wait for price action to either break out of the resistance line of the range to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. Now, while with this understanding in mind and looking at this structure yesterday, we realized that sellers, what's happening here? I'm trying to delete this. Okay, hold on a second. Okay, so during our live session yesterday, despite the range bound trading activity, we noticed that as soon as price got into that $75.87 area, that is the support line of that range, we begin to see signs that buyers are trying as much as possible to negate all attempt by the sellers to break through. And we emphasized the appearance of sharp rejection of this area, resulting into some hammer candles here. We saw the first one right here, we saw the second one too right here, and of course the third one right here, further emphasizing the strength of the buyers around this area. Now, to capitalize on this potential uptrend situation and to maximize the potential by joining before the breakout of the resistance line at the $76.50 level will happen, we marked out this level here at the $76.20 area to capitalize on the uptrend move. And of course, we saw how price triggered our first buy position around that area. We had our second buy position triggered at the $76.50 level, and a third buy position triggered at the $77 area. So at this point in time, we have a minimum of 3 buy positions running in profit. And for those of you who capitalize on this opportunity, well done and kudos to you. Now, at this point, since price had moved significantly well in our favor, it is high time we moved all stop losses to secure this current buy position, as anything could happen later in the day. So at this juncture, I will suggest that anywhere below the $77.40 area, and of course around the $77.150 appears to be most reasonable to place all stop losses on all of our buy positions hard. And while we move our stop losses accordingly, please ensure that you have enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? Are we going to continue buying, or are there chances that sellers could come in at any point in time? Now, it's important for us to acknowledge what is really going on in this market. What has led to this bullish momentum we see here in the last 24 hours? Well, from the look of things, I want to attribute the gain in price for the US crude oil to the ongoing geopolitical tensions in the Middle East. Now, we saw the targeting of civilian shipping vessels by the Iran-led Houthis, which of course has heightened concerns regarding potential disruption to supply lines between Europe and Asia. We also had the ongoing war in the Israel-Gaza situation, where Israelis continue to bombard the Gaza Strip with airstrikes yesterday, 2 days ago, and throughout the weekend. Now, this continued escalation will continue to support the ascent of US oil prices. Nonetheless, it is essential to consider the cautious stance of major central banks regarding interest rate reductions too. This cautious approach by these banks reflects a careful handling of monetary policy changes. Typically, elevated borrowing costs tend to suppress economic growth, lending to the decreased oil demand and potentially limiting the upward momentum of oil prices. So it's very important for us to take this into consideration while we continue to monitor price action. Now, for the sake of those who missed out on our earlier edition, let's quickly run through what really happened yesterday. What did we see on the higher time frame after looking at things from an holistic standpoint? So on the daily time frame, what we did here was to take into consideration the nature of price action since the month of July of last year. And the first thing we have here is this level had a $78.50 area, which of course had played a major role in determining the direction of price action. If you are with us last week, remember this level was serving as our key level for last week, where we were waiting for price action to break out of that structure to give us an opportunity to buy, which of course never happened. Now, to emphasize how important this structure is, you will see that in the month of July, this level here was a strong demand zone, as you will see. And fast forward to the month of August, we saw the same thing happen here. And not until the month of November of last year, we finally saw price break down the structure. And since that moment, price action had continued to trade below that area. And one thing this tells us is how this area has become a strong selling niche in the last 3 to 4 months. And in fact, the last couple of weeks as well, we saw how buyers struggled to break out of that area, making this area a strong selling niche, where obviously if selling pressure persists below that structure, we want to be looking out for selling opportunities. Now, in addition to the fact that that $78.50 level had been a strong selling niche, we saw how despite the strong bearish momentum in this market, as soon as price action got into the $68.70 area in the month of December of last year, we saw how it became difficult for sellers to continue that momentum. And in fact, this led into a series of higher lows, resulting in this ascending trend line we have here. Now, to help us guide our trading decisions for this week, we need a key level that we want to mark out on this chart that we will be using as a yardstick to guide trading decisions. And when we look at the structure, we have something exactly around the $76.50 level, which interestingly shares a beautiful confluence with that ascending trend line. Now, you would agree with me that at the beginning of the week, we were at a crucial juncture where trading activity was mainly within that confluence of the ascending trend line and the key level at the $76.50 area. Now, depending on how price reacts to the structure will determine how we will be trading this asset for this week. And one of the things we agreed here yesterday is that if price continue to find buy pressure above the key level, we will have no other choice than to prepare for buying opportunity, where the further breakout of the $78.50 level will welcome more buying opportunities. And we also consider the potentials of sellers, where we said a breakdown of both of the key level and the ascending trend line will be all we need to join a bearish move. Now, with this information gathered here on the daily time frame, we now scale down into the 1 hour time frame. And here we are on the 1 hour time frame. We did identify this range, which helped us to strategically position ourselves for that bullish opportunity. Now, as it is right now, something interesting is going on in this market. Now, look at what happened here. As soon as price tested that $77.75 area, we begin to notice how difficult it has been for buyers to break out of that structure, as every attempt by them to break out was met with strong resistance from the sellers. And in fact, the last 3 hours we saw the same thing happen here, further emphasizing that sellers may likely be taking over this market anytime soon. Now, zooming out of the structure, I want to show you something here, and taking into consideration the bearish momentum from last week, which ran into the $75.87 area, and the inability of buyers to break through the structure could incite the second leg of that bearish momentum. Now, how do we position ourselves for the next move based on this current structure we have here? Will price retrace and continue the downtrend continuation, or are we going to see a breakout of the $77.75 level to inside an uptrend move. Now, if we consider the uptrend situation that started this week, let's talk about the potentials the buyers have in this market. Now, for me to continue the uptrend situation here, I already have a buy stop order above the $77.75 area to capitalize on the uptrend continuation. However, if price decides to drop and continue to the downside, well, if you are a counter trend trader or a scalper, you might want to capitalize on this short move, which is about 30 pips. Well, for me, I will just stay patient and remain cautious to see how the market is going to be reacting to this ascending trend line. So remember, this ascending trend line was identified on the higher time frame, and it's going to be playing a major role in guiding our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset. Now, the only condition that will make us sell the US All Spot today is for this ascending trend line to be broken, and you can see how beautifully it shares a confluence with the $77 area. So if price can break down, retest both the ascending trend line and the $77 level, then we can start considering selling this asset. However, if price action comes back into this area and begin to find buy pressure, then I will be getting ready to join an uptrend move. So if we identify a reversal pattern around this area, let's say a double bottom structure, an inverse head and shoulder pattern, or a falling wedge, all we just need to do is identify the neckline of that reversal pattern and then buy the neckline. So that is how we are going to be managing our trade today if ever price action comes close to the $77 area. So around this area, we will be looking out for potential buying or selling opportunities, where the breakdown will welcome selling opportunities, and a reversal pattern around that area will welcome buying opportunities. So I encourage us all to mark out this trend line and levels identified on this chart, as we will be needing them as a reference point to guide our independent trading decisions. Now, I also want to state this here, that if price drops and break down the ascending trend line and it gets back into the key level at the $76.50 level, or even drop into the $76.20 level, please, all sell positions should be secured, move or stop losses secure the position, and depending on what happens to this key level will determine if we are continuing the uptrend or joining the downtrend move. So this is my simple view on the US All Spot. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. You can use that time to also mark out those levels on your chart. So I can see a handful of comments here from Daudu to Zelo, Salim43, Roro Zoom, Salim43, Rosso 2000, Caterpillar. You guys are wonderful. Good morning to you. Okay, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next assets on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And since the new week has begun, we have seen trading opportunities that supported the idea of buying this asset. In fact, we've bought this asset twice now. And for the sake of clarity and for the sake of those who missed out on our earlier session, let's run through what really happened during our live session here on the 1 hour time frame before making any informed trading decisions. So at the beginning of the week, we saw this situation here where price action was oscillating around our key level at the 17,900. Those of you who do not know how we got this key level, don't worry, I will be sharing with you a detail into that when we go up into the higher time frame. So price action was more or less oscillating around that key level to emphasize the importance of that level. And in that regard, we saw how price was initially confined within that range between the 17,940 and the 17,875 level to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we identify a range like this, we exercise patience, waiting for price action to either break out of the resistant line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And of course, with our buy stop order sitting above the 17,940, we had a buy position triggered, which of course did fairly well, let me put it that way, as we saw price move about 75 pips in profit in our favor. And if you had moved your stop losses accordingly, like we usually do when price moved significantly well in our favor, you must have been taken out with a small size of profit or at a worst case scenario break even, depending on where you placed your stop losses to. Then we saw how price came back into the key level again, buy pressure resume around that area to trigger another breakout of the resistant line, again triggering another buy position at this juncture. And as it is, for those of us who capitalize on this, we'll currently be running with about 25 pips. And in fact, due to the inability of buyers breaking out of the $18,000 barrier, I would like us to move all our stop losses on any current buy positions now to break even, so that the worst case scenario that will be a break even. So kindly move all your stop losses accordingly and secure the current buy positions at this point. Now, with a well secured position at this juncture, what is going to be our next line of action? Are we going to continue buying, or are there chances that sellers could come in anytime soon? Now, before we can get a detailed understanding into what is going on here, and for the sake of those who missed out on our earlier editions, let's run through the higher time frame to have an holistic perspective into what is going on in this market. Now, on the higher time frame, what we did here was to take into consideration the nature of price action since the month of September of last year. That's an historical data of about 6 to 7 months. And what we were able to observe here is the fact that price action has been within an ascending channel. Now, when we connected the series of higher highs, we had this resistant line of the ascending trend line marked out. And when we connected the series of higher lows, we have the support line of that ascending channel. Now, besides this resistance and support of this ascending channel is this trend line here, which of course we said yesterday is going to be playing a major role in guiding our trading decisions for this week. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will have no business selling this asset. And since the new week began, price action has remained above this ascending trend line, buttressing ideas of buying this asset. Now, in addition to this trend line is a couple of levels which we did identify here, and these levels here further emphasize that the market has been a little bit choppy since it tested the 18,100 zone. As you will see, price is confined within the 18,100 and the 17,615. And if you remember what I said here yesterday as regards to the psychology of this market dynamics, I said that when price finds a new high like this, it usually takes a while before price action acclimatizes to that zone. And as a result of this, out of fear that price may crash, those who had capitalized on the bullish momentum may start wanting to take some profit off the chart just to save themselves from any form of crash that may happen around this area. And the result of this profit-taking activities usually reflect on the chart around all-time highs, has retracement phases, consolidation phases, and of course market conditions, choppy market conditions, which is peculiar with what we've been seeing here in the last couple of weeks. Now, to guide our trading decisions for this week, we did identify our key level at the 17,900, which interestingly shares a beautiful confluence with that ascending trend line. And you know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that support the idea of buying, and we will not be considering selling unless the key level is broken to the downside. Now, with the situation we had here, so we wanted to see how market participants have been reacting, or how they are going to react to this key level since the new week began. And to understand this and see it, we will be scaling down into the 1 hour time frame. Now, right here on the 1 hour time frame, this is what we have here. Remember, we talked about this consolidation phase around our key level at the 17,900, as you will see here. Now, there is one thing I would like to call our attention to here, which is going to be playing a major role in guiding our decisions. Now, the first thing first here is that since the new week began, you will see how the 17,875 level had played a major role in negating all attempt by the sellers to break through that area. And in fact, that area has continued to negate bearish momentum, as you will see here. And during the Asian session, we saw how price found it difficult to even come close to that area, giving us a higher low to work with. Now, in addition to that, we will call this area a temporary demand zone, as the inability of sellers to break through this area for us is a red flag. So let me label this area. So we shall, I like labeling, giving it a lighter yellow. So we shall label this the temporary demand zone, which is right within the 17,900 and the 17,875 level. So let's put this right inside the box and give this a green color. Okay, so we have a temporary demand zone to work with, and obviously this is because the sellers were finding it difficult to break through. Now, as long as price remains above the temporary demand zone, we obviously want to be looking out for patterns and structures that support the idea of buying. Now, like I said earlier, we already have a buy position triggered at the 17,940. Let's see how this is going to play out. And for those of us who missed out on this opportunity, we may likely see price come back to retest the structure in an attempt to join an uptrend move. So we still hold on to a bullish bias here, looking out for more opportunities to buy. And if price goes ahead to break out of the $18,000 area, we will be adding more buy positions to our existing trade. And if further breakout of the 18,045 level, will welcome more additional buy positions. So let's mark out this one too as well, and let's see how far this momentum will go. So on this one, we still hold on to a bullish bias, looking out for more opportunities to maximize this bullish move. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also keep tabs with the potentials the sellers also have. And if we are going to be selling the USTech 100 today, what are the conditions that will make us consider selling this asset? Well, if you would ask me, the most convincing idea is to see price action take out all the buy positions within this temporary demand zone here before I can start considering selling. So if I want to sell here, I would like to see something like this. Breakdown retest of the structure before joining any bearish move at this point. So it's a simple trading setup we have here, where we continue to maintain a bullish bias as long as price remains above that temporary demand zone, and we will look out for selling opportunities only when this temporary demand zone is breached and broken to the downside. So this is my simple view on the USTech 100 for today. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. So I see you, Dina. Good morning. CJ Malls, good morning to you. CJ Malls says XAUUSD. Of course, we are going to be attending to the XAUUSD very soon, so I encourage you to stay tuned in. All right. Panayo 621, Baya Saikan, and 573. Good morning to you guys. Glad having you around with us this morning. So, in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the newly reintroduced GBPUSD asset. And the last 24 hours hasn't been very impressive, as the sell positions in the buy and sell position initiated yesterday faced some challenges, as the GBPUSD remained confined within a range below the 1.2700 area to further emphasize the prevailing uncertainty in this particular market. Now, a subdued US dollar and a cautious market sentiment are fueling a battle between the bulls and the bears, with market participants eagerly anticipating today's speeches from both the Bank of England and the Federal Reserve policymakers for market direction. Now, let's look at this technical structure here, which we identified yesterday after noticing that price was confined within the 1.26830 level and the 1.26565 area to give us an insight into the prevailing uncertainty in the market at that point. And usually whenever we identify a range like this, we expect to wait patiently for a signal in the form of either the breakdown of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. And of course, we saw what happened here yesterday, but price did break out of the resistance line of that range at the 1.26830 level, and we saw price move about 15, 16, 18 pips thereabouts before that bearish momentum came in. And if you had moved your stop losses accordingly, you must have been taken out with a modest size of profit, or worst case scenario break even. Now, since the Asian session today, we begin to notice some buy pressure resume in this market, resulting into price action finding series of higher lows in this market. And as a result, a re-entry happened about 4 or 5 hours ago, and has since been trading, but is still struggling at this point, though it's still in a loss. But we still cannot ignore the potential the buyers are still present in this particular market. Now, we cannot ignore the recently released FOMC minutes, revealing that the Fed's commitment to a data-driven approach, resulting in a more dovish stance that exerts downward pressure on the US dollar, which of course is providing support to the GBPUSD. Now, another thing on the other side of the pond, that is in the United Kingdom, the governor, Andrew Bailey's, and other Bank of England policymakers hinted at the possibilities of delaying rate cuts during their last week's discussion, a factor believed to have bolstered the pound sterling's value and at this moment established a structural higher lows on our 1 hour chart since the beginning of the week, which for me is going to be a major yardstick to guide trading activities for today. Now, looking at the structure closely right here on the 1 hour time frame, you will see that price still remains above our key level, the ascending trend line we identified on the higher time frame. Let me quickly show you what things are looking like on the 4 hours time frame. So if you look at the structure here, after considering the nature of price action since the month of February began, you will see that price action is trading within an ascending channel. And look at this, connecting the series of higher highs, we have the resistance line of the channel, and then connecting the series of higher lows, we have the support line of the channel. So price is still trading within this ascending trend line, and in that regard we definitely want to maintain a bullish bias in that regard. Now, another thing that we also emphasize on the daily time frame is the descending trend line that captured the series of lower highs since last week Friday. As you will see, since the week began, price action has been oscillating right around that descending trend line, which for me is a sign that portrays how crucial this juncture is. Now, market participants are not sure what to do. Is price going to break out of this descending trend line to welcome buying opportunities, or how are we going to see price continue to respect the trend line to incite a sell-off here? Now, to position ourselves for the next move, let's scale back down into the 1 hour time frame where we will begin to see things more clearly. So let me reset this. All right, let me zoom right in. So for today's trading session, we have a structure that we will be using to guide our trading decision, and that is this newly identified ascending trend line. And of course, you will see that this ascending trend line has played a major role in guiding this upward momentum since the beginning of this week. So we shall continue to hold on to a bullish bias as long as price remains above this ascending trend line, where for those of you who missed out on the breakout of the 1.269, placing a buy stop order above this structure makes a lot of sense, and we look out for more opportunities to maximize the bullish momentum at the breakout of the 1.2700 area. So that is how we are going to be managing any bullish bias in this market today. However, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. Now, what are the conditions that will make us sell this asset? Well, first of all, we need to acknowledge the fact that the area between the 1.27 and the 1.269 had played a major role in pushing price to the downside, and also serving as a barrier for buyers whenever price action gets into the structure. And in fact, the last 3 hours have seen the same continuous selling pressure around this area. And with this information here, you would agree with me that this zone is considered to be a strong selling niche. Now, if the selling pressure persists here, leading into the breakdown of this ascending trend line and the 1.26830 level, then we want to start considering selling. But we are not going to be jumping into a sell position right away. We are not having a sell stop order around that area due to the fact that this zone has been a buying niche since the week began here. So we would like to see some beautiful confirmations before jumping into any position. So as soon as price breaks down the structure, we scale down into our lower time frame to see signs that buyers are finding it difficult to climb back above the ascending trend line, which obviously will reflect on the chart as continued selling pressure, inciting a bearish momentum for us. And if price goes ahead to break down levels such as the 1.26565 and the 1.26500 area, we're definitely going to be adding more sell positions to our existing trade. So you can see how crucial that ascending trend line is, and of course these levels at the 1.269 and the 1.2683 area, which depending on the direction of the breakout will give us an idea into where price will be going for today. So I encourage us all, mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our trading decisions for today. If you have any questions, let me know in the comment section. As always, I will be taking the next couple of seconds off, 5-10 seconds off, to see if there are any questions before we move on to the final asset on our watch list for today. Alright, so in the absence of no questions, I want to take this as a confirmation that we are all good, and all I've said so far has been quite explanatory. So we shall be moving right into the final asset on our watch list for today. And I hope CJ Malls is still around, as we're going to go into your assets in a moment. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on this asset so far this week has commenced on a challenging note for us, as both our buy and sell positions from yesterday failed to meet our expectations. And currently price action appears to be making another attempt to reach the previous highs amidst a persistently weakened US dollar, which of course is influenced by the declining US Treasury bond yields and anticipation surrounding the forthcoming US economic data. Now, for the sake of those who missed out on our earlier editions, so that they can catch up with what we are talking about here, let's do a quick revisit of what we saw here on the 1 hour time frame that led to the decisions we made. Now, at the beginning of the week, we identified a range where price action was confined within the $2,035 level and the $2,030 level to emphasize the prevailing uncertainty in the market at this particular point in time. And usually whenever we have a range like this, we exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, for me, I did enter this buy position here yesterday. Prior to our live session, I did mention this, and I did say that for those of us who missed out, we should have a buy stop order above the structure, which of course never happened for you. Now, we saw our price came to break down the support line at the $2,030 area, which of course triggered a sell position, and we saw price moved about 50 pips in our favor. And if you had moved your stop losses to your entry point, you must have been taken out of that position at a worst case scenario break even, and if you didn't do that, you must have been taken out in a loss on that sell position. But it's okay, the week is still very early and we still have about 4 more days to recoup whatever loss we've incurred so far. Now, during the Asian session, gold gathered some interest from buyers following yesterday's pullback, maintaining stability above the $2,030 zone after breaching that descending trend line we identified yesterday, as you will see here. Remember, this descending trend line was one of the parameters we were using to guide trading activities that was supporting bearish momentum, and we had this ascending trend line we identified on the higher time frame as a yardstick to guide bullish opportunity. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset. Now, for those of us who missed out on our live session yesterday, let me show you what things are looking like on the higher time frame. Now, I will run through the 4 hours time frame quickly, where we took into consideration the character of price action since the beginning of this month of February. And in fact, the first half of this month was more of a bearish momentum, which culminated with that US CPI data that incited a bearish traction in favor of the US dollar. So it was more of a bearish momentum throughout the first half of this month. And as soon as price tested the 1,985, that is the beginning of the second half of this month, we begin to see bullish traction resume all over again. And when we connected the series of higher lows, we were able to identify this ascending trend line, which we did agree at the beginning of the week that we will be using this to guide our trading decisions going forward. And if price remains above this ascending trend line, we shall maintain a bullish bias on this asset, and the only condition that will make us sell this asset is for this ascending trend line to be broken to the downside. And as it is right now, price action is still trading above our ascending trend line, so definitely we want to be looking out for patterns and structures that will support the idea of buying this asset. Now let's scale back down into the 1 hour time frame, where we shall be seeing things more clearly. Now, as it is right now, you will see what happened a couple of hours ago. Price action finally broke out of the resistance line to trigger the buy stop order, had a $2,035 area, and has since been trading above that particular level. And of course, I want you to be having your stop loss way below the ascending trend line to give enough breathing space for price action to move around. And this stop loss right here will be between about 30 pips to about 50 pips thereabout, giving enough breathing space for price action to move around. Now, at this juncture, we maintain a bullish bias on this asset, and we shall continue to look out for more opportunities to buy if price action goes ahead to break out of the $2,040 area. So we also have a buy stop order above that structure to maximize the potential of this bullish move. So this is our view regarding the bullish momentum on this asset. Let's see how far this momentum is going to go. Now, in as much as we are looking out for buying opportunity, like I always say, we cannot ignore the potentials that sellers can also come in. In fact, look at what has been happening here. Let's see the higher time frame quickly. I want to show you something about the $2,040 area. Now look at the $2,040 area. If we go to as far back as the beginning of this year, you will see how the $2,040 area had been a strong selling niche in this market. Now price action is gradually approaching that area, and of course we saw what happened last week Friday. As soon as price tested the 2040, we saw bearish momentum push price to the downside. And as it is right now, the question going into today's trading session is, will price break out of that 2040, or will the selling pressure persist in such a way that it will lead to the breakdown of this ascending trend line? And in fact, if it breaks down this ascending trend line, and then we will start preparing to sell this asset. So I'm looking at below the 2035 level to sell. So if we have a breakdown, please remember we need a retest of structure for confirmation's sake on our lower time frame before joining this bearish move. And if we actually and successfully join the bearish move, that is after a retest of structure, we should take note of this area around the 2025 level, which happens to be our key level for this week. And one interesting thing about the 2025 is the fact that it shares a confluence with this descending trend line we identified yesterday. Now look at what happened here. We saw price break out of this descending trend line, and from a technical standpoint, we expect that price at some point may come back to retest the trend line in an attempt to continue the uptrend move. So if we are selling this asset after the breakdown retest of that ascending trend line, please, as soon as price gets into the 2025, kindly move all stop losses, secure your current sell position, and let's wait to see how the market is going to react to that level. If we begin to see reversal patterns like double bottom structure, head and shoulder patterns, all we just need to do is mark out our neckline and then buy the breakout retest of the neckline to join the uptrend continuation. However, if price goes ahead to break down the structure, then we will have no other choice than to add more sell positions to our existing trade. So it's a simple setup we have here, and you can see how this $2035 area is going to be playing a major role in guiding today's trading activities. Please mark it out on your chart, and this ascending trend line too as well is going to be guiding both the bullish and bearish expectations in this market. So if price breaks down the ascending trend line, then we want to be getting ready to sell. So this is my view on the XAUUSD for today. I hope I made myself very clear, and I will be taking some 10 to 15 seconds off to see if there are any questions before we start rounding off on today's XAUUSD live technical analysis session. I see you, Jonomix. I see you, Polo 1977. I also see you, Caspar. You guys are wonderful. Good morning to you, and glad to have you around with us this morning. So in the absence of no questions, I want to assume that all our said so far has been quite explanatory, and we are all on the same page. And it's on this note we have come to the end of today's extreme speed price action tutorial session. And so far today we were able to attend to all of the 4 financial assets on our watch list, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD. And we was able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And I do hope we all marked out these levels accordingly on our chart. If you had done so, well done to you. So all we want to be doing right now is to exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to have a well-defined risk management strategy in place to mitigate against any risk on your portfolio. For those of you joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather in this community to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and also prepare ourselves for tomorrow's trading session, which promises to be an inciting and exciting one. As you all know, we are looking forward to the US macroeconomic data, that is the US GDP, which promises to bring some volatility into the market, and obviously we want to position ourselves to be on standby to capitalize on that move. So don't miss out on tomorrow's session. I look forward to seeing you. Remember, same time, 10 a.m. UTC, 11 a.m. West African time. So it's on this note I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.